Thursday, April 11th, market analysis, Stan Ehrlich. We have a little bounce today, not across the board, but the spider is up about 1 1/3 points. You can see the E-mini at the moment is up about 8.50, which is translated into about 80 cents, so to speak, for the spider. They are rarely exactly the same up and down, similar. And that's because the closings are at different times, period. So today's low is approximately, and in the case of the E-mini, just a little bit below yesterday's low, which was a new low for about 2 or 3 weeks. We are coming very, very close to this yellow line, this one right here, which I think is going to start another sharp break. If we can get below it, stay below it, close below it, we'll probably drop off for another few more days after that, coming down to the next and then the next and the next support area. Please remember, I am bearish for this technical correction during a longer term bull market. Started October 13th of 22. The last significant low was October again. That's the October lows. I love the October lows. They're 90% good in the last 30 years. The October low of 23, right there. So we're rolling over. We're losing upside momentum. We're attacking one of the minor support areas as you stair-step your way down, and I think for the next 1 to 2 months. I've been saying that for the last couple of weeks or more. Now we're beginning to see it sort of come true. I'm not real happy yet, but I certainly am more so than I was a week or two ago. And I'm expecting today's lows to be violated, to be broken, and the support line to be broken, the yellow one right here, frankly, in the next few days. Okay, I meant to do this. Next chart is simply the detail for the E-mini June futures 5-minute chart. And at the moment, we're popping back up again toward the high of today. Nothing particularly dramatic about this. No reversals, nothing. But I do want to go back to the chart here. We are not super close, but pretty close in the last few days to oversold. So it would not be a surprise to see the market fiddle around sideways or try to go up a little bit in the meantime. Yesterday was a huge bearish engulfing. That's the third one that we have had here in the last 2 weeks. That's a lot in 2 weeks. Here's the last Thursday, a week ago, bearish engulfing. And then about 3 days before that, at the top of the market, the high day, a bearish engulfing. It keeps hammering at the prices. And so far, every few days, we've seen new lows again. So that's what I'm expecting. I know that and I'm not much of a fundamentalist, that the inflation rate is not stabilized or gone down, especially like the Fed expected. So they're not as hot to trot to lower rates as we had expected. And that kind of is the underlying fundamentals, if you want to call it that, for the reason for the market to stop going up and or, depending upon your time frames, start to go down. So I understand that, but I also see it differently than other people. I'm not a fundamentalist, and frequently, the fundamentals are the most bullish at the top of a market and the most bearish, misleading as hell, at the bottom of a market. So I read the way the market moves. Next chart is the spider itself, daily data. And I've got all the way back to last October. So you can see this last big bull move. And it looks to me like it is losing upside momentum on an intermediate to longer term basis. And I'm looking for new lows real soon. Simple as that. Now, I don't think I gave you my downside objective on the E-mini. It is, in fact, in this zone, approximately 4,900 down to 4,800, or the approximate price range that we had back from the middle of December to the middle of January of this year. Going back to Spider. On the 10-minute chart, we've got a rally coming close to the high of the day. The lows were just a little bit, probably exactly the same as yesterday's lows. Nothing particularly important about what's going on the Spider at the moment. QQQ, a little different story. We did not make new lows in the last couple of days since the top. We are around the middle of the range for really the last month and a half to 2 months. It's got to go down a fairly decent amount in order from where it is right now, which is up 3 points on the day almost. It's got to go down below that yellow line, which is the lows since February 22nd, in order to have a significant downside breakout. We did gap up at the top, exhaustion gap. It did make a new high for the whole move, but that was it. Now, I know a lot of people like to, look at that new high for the move and interpret that as being bullish. I would say absolutely, in my opinion, yes, if it stays above the previous highs. What happens if it didn't? On the close of that day, we were at 445.87, which is near the low of the day. Nowhere near closing above previous rally highs. And I think I made mention of that on that day. So here we are. We're going to go lower, in my opinion, and probably down into this realm, 412, and maybe even down to 395. Next, the detail for the QQQ. New highs a little while ago, 30 minutes, an hour ago for the day. But in the bigger picture, and this is a 5-minute chart, we've been trending down for a couple of weeks. Generally lower highs and generally lower lows. And I think that's going to continue. It might take another day or two. Next, the NASDAQ futures daily chart. We challenged the support level. I've got a yellow line right there, but we didn't break it. I need to close below that in order to feel real good about calling a top for the last few weeks. Next chart. And it's the NASDAQ June futures contract on a 1-minute chart. So we've been popping up a little bit here this morning. Again, nothing particularly super important about what's happening as far as I can tell on the 1 minute or the 5 or 10 or 15 minute. The Russell did make a new low for approximately a month plus, but didn't stay there yesterday, and it gapped down. So it deserves a little rally to close the gap and then turn down, in my opinion. I'm not really able to come up with any great particular pattern that I love to watch for the last half a century, but there's a possibility something could still develop. Remember, I'm looking for this decline into a certain price range, and I think it's going to take 1 to 2 months. Next, Russell daily data chart. It's the RTY, did make a new low for a couple of months, but is popping back up. So a very short term, very minor, modest, not long-lived day or two, maybe 3 rally could be starting. But again, I don't trust it. I don't think it's going to go anywhere. It could turn down any old time and make new lows real soon, real quick. And here is the bond futures. They are now officially oversold today for the first time in weeks. Secondly, it's at the bottom of the downward slanted channel that I've drawn on the chart for you for the last week or 3, 4. And it is in a significant support area. Frankly, the support area is not all that significant, but it's about the only thing we've got around here. But the fact that some support, a previous bearish support line at the bottom of a channel, downward sliding channel, are at the same levels as today's lows, and it turned oversold today, all add up to the possibility or probability that we're about to turn around and have a rally. Now, if that happens, then the stock market indexes will be influenced to be stable, if not rally a little bit. But remember, I don't think this break in the indexes and in interest rate futures is quite over yet. The Fed doesn't like the inflation numbers. They could change any time. I don't see them changing that quickly. And I frankly expect to see this market zigzag its way down, but not dramatically fast, until finally everybody is convinced that inflation's under control and everything starts to trend back up. But I think I hope I will see this happening in the price action before the fundamentals are widely known, before the reports. Okay, so that's my sort of sloppy opinion at the moment, but it's basically a little bit slowly zigzagging bearish in most indexes and interest rate futures for the 1 or 2 months ahead. And the 10-year notes is, of course, extremely similar. But finally, yesterday, after my YouTube, we got down to my minimum downside objective, which again was around 109 to a little under, and broke a chunk. It went all the way down yesterday to about 408 flat. Today, the low is 407.27. Obviously, my downside objective has been fulfilled. The double top worked. I started talking about that a couple of months ago. No problems. Now I'm looking for some continuing decline, but since it's significantly oversold, anytime you can get a turnaround. If I get a rally starting and I get a green ER buy signal like we did at the bottom of the bond market and at the bottom of the 10-year note market, both of them. And by the way, we had buy signals on not soybeans, but soybean oil, soybean meal, corn, and wheat, all 4 out of 5 grains. You'll see that in a few minutes. So interest rate futures could both have bullish engulfings all at once, being oversold and at levels where I might expect that to happen. Now we're going to get into the notes 1-minute chart. No big deal. You can see it broke on news this morning, or yesterday rather, and dropped off even more after that. And today a little bit more. Okay. So crude, heat, unleaded, and natural gas toward the end. Overbought, has topped out a little, dropped off a little, not much. That's in the last 4 days. Basically, dropped off a little, went sideways. Now we're in the lower half of the range today, close to the lows for the last week and a half, 6-7 days, something like that. And if we start getting below 84.50, it should start dropping off a lot quicker. Next stop on the way down, and I am turning bearish, 82.80. Next stop on the way down, and I think it's going to go down to 79.07. Might even go a little further. But I think this correction is going to last a few weeks and drop off, I think, down to 79. Next chart. Natural gas. Down quite a bit today. Not lower than a couple of days ago, Monday. Not too much more to say here, except the last time we got oversold, a week and a half, 2 weeks ago, we were in total neutral ground for the trend down, but that did help cause a little bit of a rally. And I think the phrase "a little bit" is about right. Didn't go anywhere, didn't go very fast, didn't do that much. Obviously, the trend is down, and the trend is your friend. I'm bearish. I'm expecting these lows to be tested and to make new lows to the move. Next, heating oil. Today, we have a brand new bearish engulfing ER sell signal, period. It's an outside down day, and it is not in my favorite place. I like to see them at the very highs. Like this one is almost the exact high of the trend completely. Not that this is bad or good. I just like to get closer to tops and bottoms. So I'm looking for a test of support, which is around this area here. And I'll draw in my usual support zone lines. And I'll start it right there. And cross right about there is good. So I think, and that's a little too dim, isn't it? You can't really see it very well. Let me lighten it up a little bit, line, and make the opaque maybe 80. For some reason that didn't take. I'm not going to take the time. So I'm going to get down to 2.57 and maybe down to 2.54 soon. A week. We're almost low and last. I don't see any bounces. And all I have to do is stay lower than where it closed yesterday. And the signal should be, could be, I hope it's good. Next, we have gold near the high of the day right now, up 22. I do believe that some of the activity that we're looking at for the last 2 to 3 days imply that it's trying to top out. Now, I really can't say that with the current quote near the high of the day right now. So if it starts to make higher highs, it's simply going to get more overbought again and be a likely top again. I can't change my mind. I think that gold is in the process of topping out. I need to see it close below previous lows. It's not trying to do that right now. It could flip-flop before the close today. Doesn't seem very likely. I think it's topping out, and I don't have any good evidence yet. Next, silver, same comment. Now, yesterday I proclaimed there was a bearish engulfing in silver. I was looking at bad data. I have no way of knowing that the data is bad. It's a problem in the industry. If you don't have clean data, good data, or double check something like a high or a low, or in particular closing prices against some other data feed, maybe a website, you are going to find occasionally some bad data. So this has been corrected. We did not have a bearish engulfing yesterday, like I was looking at. And as a result, all I've got is overbought like gold. So we'll see what happens. I think they're both topping out, but I can't prove it yet. Next, overbought in platinum. Kind of the same story. Don't have a lot to go off. Metals all are overbought. I think as a group, they're going to turn down very, very soon. Next, high-grade copper did have bearish engulfing yesterday at one point in time. Therefore, the ER1 kicked in. But by the time the market closed, it didn't close lower than the previous close, apparently. So, although overbought conditions and a gap to close at lower levels exists, that's what I have to say. It's topping out, and it got into a resistance area above the market. And it got very close, not quite as close as I'd like, but it came up pretty close to my minimum upside objective off of this very large 11-month head and shoulder bottom. The first shoulder was way back in May of 23. The bottom was give or take a week either way, 2 weeks either way, around the middle of October of 23, so say October. And the last shoulder low was February 13th. Breakout, classic, huge rally out of the neckline, big bounce, retracement, classic, but it just didn't quite have enough momentum, strength to get to my objective. Came close, but I think it turned around. Next, soybeans, the grain complex. Remember, I already mentioned, I'm about to show you, we bought 4 out of 5 of the grains, wheat, corn, meal, oil, but not beans, unfortunately, the bottom. So at the bottom, no buy signal, but we had a recent sell signal. That signal's working okay, although the exact rules that my strategy follows did get stopped out. The signal was a forerunner of a decline, which is what I would have expected, especially if the signal worked exactly correct. But this one was not quite exactly correct. Now we're oversold. Now we're in new lows completely. I'm looking for lower levels, but because of the oversold, we might try to double bottom out, and we might even go down 1 or 2 days more. Now, at the moment, it's come all the way back to where it opened, which is around the low of yesterday. If we have a bullish engulfing today, which does not look likely, it's always possible. I've seen them happen in the last 60 seconds. Big something happens, and boom, all of a sudden, you're caught by surprise. And unless you have an automated trading system, you're going to miss it. The computer wouldn't miss it if the code is correct. So oversold means a bounce, but maybe not immediately. And eventually, I think we're going to see the lows tested and made new lows, making new lows. Now, meal or oil, soybean oil, sorry. Our buy signal was on March 1st, almost the exact low of the trend, very close. For all practical purposes, that was the bottom. We had a very nice rally, but I keep saying, and I have been saying for months, I don't trust rallies in grains. There's no major bottom forming here. The one bottom or other bottoms I'm looking at are failing slowly. They're not doing what I wanted in terms of potentially being bullish. So I think we're going back to 44. Next, meal. We got the exact low day. The oil was super close. And a rally, but it was sort of feeble. It didn't rally that much. Now that date, February 29th, is still the lowest low. And there's still a chance it could be the low for a long time to come, but I don't think so. Rally occurred. Resistance stopped it basically, not very cleanly. Dropped below it to support below the market, where it has been bottoming out for quite a while. It's an excellent long-term support area. But every time we rally, we just can't get to higher highs, and that spells a break of support. That's what I think is going to happen. And if we do start closing in the area of, say, 315, oh boy, probably go down below 260. Next, corn. We got the exact low, and in wheat, day. Now, nice trade, not great. We're looking at an outside down day at the moment, bearish engulfing in corn, and that spells down. Resistance from previous lows stopped the rally perfectly, and that was 2 weeks ago. What can I say? I think it's going to break 424, and I think it's going to make a test of the lowest lows, which are in the ballpark of 409, and make new lows for quite a while. Ever since we went back to, again, we bought the low, September of 21, September 10th of 21. Wow. Okay, so currently plotting the May contract. Next, daily data. Wheat bought the low day twice. The first time we had a bullish engulfing on March 8th, that bullish engulfing was the low of the move, but it was broken the next day. That day, on Monday, March 11th, is now still the lowest low. And we did have a good trade, wasn't great. Now we've tested a resistance line, a bear trend line, and it is apparently effective. And we're now making new lows for the last 4 or 5 days. And we're close to those lows right now. Looks like this market's going to test the bottom of the market at 523, 522, and maybe make new lows again. The longer term picture in wheat is obviously bearish ever since we sold the high day on, what is that, March? Look at the price date, March 8th, I believe, of 22. A gigantic double limit, bearish engulfing, in overbought to say the least, sell signal, smack dab on top. That is nothing short of spectacular. I didn't believe it when I saw it. All right, but I knew what I was looking at. I just was dumbfounded that it happened. So bearish cattle testing lows. At the moment, we're at the high of the day, but that's only the middle of yesterday's range. And we did make it lower than yesterday's lows and Tuesday and Monday. Maybe it's the exact same price. But there's only one other low, Friday of last week, to break into new low ground for months. And I do think that's going to happen. Now, we're oversold, and we haven't had any kind of rally yet. So there's the possibility of a little rally first, and then new lows. But let's see what happens. Right now, no signals, no engulfing, no reason to get bullish, except kind of holding for 3 or 4 days, and we're oversold. But that's really not enough for me. And we're going to the hogs. Wow. Yesterday, I mentioned we were right up against the top of the resistance area, a reason to get bearish. 2, we're overbought, a reason to get bearish. 3, an upside exhaustion gap possibility, reason to potentially get bearish. Now, there's gaps below the market also to close. Gaps are almost always closed. They're like a black hole in space. They tend to suck the price action sooner or later back into the gap. We are down today, not too much. It is a doji. Certainly not very convincing. Doji is usually a sign of uncertainty, and that's about it. So I'm looking for this market to fail, come down, close the upside exhaustion gap in the last couple of days, and keep on going to the bottom of the trading range I've outlined, which is a very large resistance area, and keep on going a little bit more, at least a little bit more, to close that little tiny gap right down in here at 88.60 or so. Yeah, that's about right. And as you can see, has the long-term trend changed, or are we just screwing around in here and going to make new lows again? We got the top of the market. Hey, that's nice. I didn't see that for a long time. At the top of the market back on February 22, the high day, I think the high. Oh, yeah. Oh, yeah. Okay. So I'm going to go to my trade station to show you the ICE markets, ICE index exchange in New York. The, whoops, wrong workspace. The coffee, overbought still, new high ground again, shot through the roof today. These turning points can be very tricky. That's why a lot of people don't like trying to pick tops and bottoms. I do. I like it. You've seen I'm not the worst at it. So I'm still looking for a top and maybe a signal, of course, for coffee. I wouldn't be buying it up here. That's for sure. Looking for a sell signal. OJ, and I hear he passed away today. Cancer, 77, 76, whatever. So bye-bye OJ Simpson. OJ popped out of the top of the pennant, but closed on at the top of the pennant and sank right back into it today. I gotta wait for some kind of a signal here, some kind of definitive situation. Otherwise, we're just going to go a little bit tighter and tighter and tighter and get squeezed to the right in this pennant formation. Next chart. Wow, coffee just won't stop. I just talked about that a moment ago. Cocoa also going straight up. Gosh, there goes my coffee and cocoa habit down the drain. And I'm looking for sell signals in cocoa also, overbought, and divergences, higher highs in price, but not higher highs in the indicator. Next, oversold on cotton. And we are almost down to my downside objective. I drew in this downside objective at least back on March 14th, a month ago, if not even earlier than that, because I could see the head and shoulder top forming, probably the possibility around March 7th, certainly 8 and March 11. Those are the 3 days that you should have been becoming aware of a possible head and shoulder top. It was only a few days later it broke out, tested the neckline, and you can measure the downside objective even before it breaks the neckline, but certainly on the day it breaks the neckline. And there it is. And here we are, almost there. Not that it's going to bottom out right away. It might. It's oversold, and quite a bit. So I'm looking for buy signals, and it's just now coming into some decent support. So there's other reasons besides the downside objective. And sugar, oversold again. Oh gosh, lots of stuff looks like it's about to have a rally. That's not particularly good for inflation. So yeah, what can I say? It's around a little bit below, but around the bottom of that trend line. I think it's about to turn back up. These previous lows are obviously support levels, and they're not too far away, especially the little bit higher one, 20.5. And we're trading at 20.80 at the moment. So watch for buy signals. And we're back to unleaded gas, RBOB, still going up. And this is a classic bull market type of situation and interpretation of RSI. Rally, gets overbought, has the pullback like you would expect. Rallies again in a bull market, new highs, gets overbought, does the same thing again and again. And are we doing it again? Very possibly. So I got to be bullish. Trend is up, no signals. It's staying in new high ground. Great. I want to point out that we did get the exact high day back in September 15 of 23. A whopper. Next. OJ, we've talked about it. Thank you very much. Have a great trading day.